Hello and welcome to another update video about Solana. On the Solana chart, we are still in this sideways consolidation, as you might know. This, basically this wave 4 correction, sideways correction, which started already in March, around the 17th of March, 16th of March. That's when this correction started. The analysis has been quite consistent in that I've been highlighting for many months now that we're likely in a fourth wave. Of course, the exact shape of that wave 4 is impossible to determine in advance. We know that a wave 4 can be a triangle pattern. We know that a wave 4 often is a so-called flat correction. We've got these potentials on the chart here. For example, in yellow, and that is currently my, let's say, the working wave count. The scenario I'm following primarily at the moment, that's the yellow scenario, this actual sideways triangle, A wave down, then this B wave rally, which topped in around the 21st of May, a C wave, which formed a higher low, then this D wave forming a lower high, and the E wave possibly forming a higher low. That's still outstanding. Yeah, we might be in the midst of forming a D wave, which is a corrective rally within a triangle. Of course, unreliable because we're dealing with back-to-back corrective price action. But what is quite clear is, basically the invalidation points are quite clear. The points that determine the range boundaries. So for example, we've got $119 there. It is the lower boundary. That's the invalidation point because any break below it, while it wouldn't invalidate the wave 4 idea, it would invalidate the triangle as such. To the upside would be a direct breakout, and that's 190. So everything in between could be considered noise, and it's just a range. It's just a sideways range, chaotic, erratic price action, and you need to expect further chaotic and probably directionless price action as long as we stay within the range, okay? Because it is just sideways consolidation. The market basically hasn't fully made up its mind yet. That's what a triangle is telling us. It's a balance of forces between bulls and bears, and that basically leads to this erratic price action. But when we can identify a possible 5-wave move up, even if internally or if within or when within this range, I mean, that is a small setup. Obviously all within a larger correction, which makes it a bit difficult. But yeah, we have identified a possible 5-wave move up. Before we zoom in, quick look at the alternative scenarios. So if we see a break below $119, I'm first going to watch the orange scenario, in which we're dealing with a WXY structure, and in the Y wave then an A, B, C, okay? Even this B wave could extend a bit. So WXY and then A, B, C, also possible. Especially given the 5-wave move up, it might be that we push a little higher, but yeah, that is basically something that I'm watching first. If we break below $119, then we have the next support at $107, $94, and $86. Only if we break below 86, it will become more likely that it's the white count. All of these are wave 4 corrections, just different ways of how the subdivisions evolve. But we don't need to talk about these too much. As long as we're holding 119, the triangle pattern is what matters, okay? And then we can take a look at the internal wave structure, already posted earlier today on Discord for our gold members, that we have identified a first 5-wave move up. This likely topped, and we were now watching for a pullback into this support region. Since that update, we've already come closer to that support region. And again, it's not a target, but these support levels are most often reached in a wave B correction. Now, please be aware that B waves can be extremely shallow. They can be very deep. They are a little bit less reliable than wave 2, for example, which would respect these Fibonacci levels more. The B wave, not necessarily that much, but still we have some levels to watch. They are between $125.81 and $135. Looking at the microstructure, if we're really in that B wave, we're dealing with an ABC structure. We might be in the process of forming that B wave right now, or maybe it's already finished. It's a very shallow B wave, but I prefer a clear 3-wave move down in wave B. And then the first level to watch will be 135. Please be aware that in the area of the previous wave 4 of one lesser wave degree here, around $132, that's where we also have the 50% retracement. So this is one key level for a B wave, the 50% fib level, and below that the 61.8 retracement at $129.57. So we need now a little bit more price action to determine where we are likely going to land, but this is already on a pretty small wave degree anyway, so you have some levels to watch. And overall, we could keep it simple to say that as long as we're holding 125.81, it's plausible to watch for a C-wave rally. This C-wave rally should also be a 5-wave move. So if we can add those to the chart here. 1, 2, 3, 4, 5. Best indication that the C-wave to the upside has started would be a first 5-wave pattern to the upside in wave 1 of C, followed by a wave 2 pullback, basically after a reaction, after an impulsive reaction to the micro support zone. Yeah? Any break below 125.81 will make upside follow through less likely. Not impossible, given that B waves sometimes, as I mentioned, overshoot to the downside, could easily break support and still recover. But most B waves would still be found in this support region, or would typically terminate in this support region between the 78.6 and the 38.2 retracement. Now, you could say the formal invalidation point is the low of circle wave C, here at $121.40. But even then I have to say, as I said, B waves can actually overshoot to the downside, even though it would be rare in this occasion. But I don't want to fully rule that out. Again, the key level is 119 in that region. Well, in that case, if we break below this circle wave C low, which formed on the 5th of July, yeah, it's the $119 level. That's, again, the formal invalidation point for the triangle. If broken, we have to watch for a larger wave 4. Again, in that case, the overall assumption wouldn't change. We're still in a wave 4 correction. Just the structure of the subwaves is changing, which basically, to be honest, happens all the time in these corrections. It wouldn't be anything unusual. We have to prepare for, let's say, chaotic up and down movement, whipsaw price action in these corrections. That's my update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.